Hi, everyone, and welcome to another exciting episode of The Vault hosted by BitGo. I'm Zain Beatty. I help lead the partnerships for fintechs here at BitGo, and I'm joined by Viru Raparthi, CEO and co-founder of AndX Global. Viru, great to have you, man.
Thank you, Zain. Very happy to be here.
Absolutely, man. I know that this is off the back of some exciting news as well that we just both announced today. We're very excited to partner with you guys and very happy to have you here. Viru, obviously took a look at your background before we hopped on. Wharton grad, Robobank, BAML, Marv Capital. You have been at the heart of the global finance and credit system over the last couple of decades. How did you go from that and being so deeply ingrained into Wall Street to owning one of the largest events companies in Turkey and operating exchanges across the globe in Turkey, Philippines, Brazil? Just how did that happen, man?
Thank you, Zain. So the 25 years or so on Wall Street was primarily institutional.
Yeah.
I started my own broker-dealer 17 years ago and focusing fiercely on institutional clients. Actually started it at the onset of the great financial crisis. So we saw an opportunity when, you saw institutional desks being let go. Our clients were, they had no place to go. They call the broker-dealers. There's no one there. So we saw an opportunity and we started a broker-dealer at the, height of the crisis. And we built relationships. We know the docs, we know the structure, we respect regulation. So that actually made us into one of the largest trading books for a specific asset on Wall Street. Then fast forward through the crisis, we helped many bad banks divest their portfolios. And we had more than 300 unique institutional counterparties we traded with. Again, it's relationship building across, the whole US and Europe. So then what I realized 4 years ago, we do not have the same access for retail investors. So having, I travel a lot, as you know.
Yes.
Right?
Just got back from Dubai.
Came back from Dubai. And so when I speak with people, they're treating the stock exchange, the equities as, day trading, invariably they lose the money.
Yeah.
So that's when I said, is there a way we can access or we can provide access to retail investors to these quote unquote, very, robust products.
Yeah.
In finance, you do have bad product design as well, but there are some products which actually speak and fit very well with retail investors. So that's when I said, okay, will traditional finance cut it? So there were no rails, there was no real regulation at that time. But then I saw the technology, blockchain, and I said, okay, this is something really, that was the aha moment, if you will.
Yeah.
You could fractionalize through tokenization, right? And coming from structured credit and securitization, that was very natural for me. So we want to carry the good governance principles from traditional finance, bring it to Web3, and then, provide access through tokenization. So that is kind of where this whole thing started.
Yeah.
And the regulatory regime at that time in the US was still gray. But Turkey, Philippines, Brazil, they're actually very crypto forward from that standpoint. So that helped us, so again, coming from, I'm the chief compliance officer of my broker-dealer too.
Yeah.
So I have to, definitely respect the laws of the land. So we ended up getting licenses in Turkey. We took stakes where not possible, but yes, that's how it all started. And now thanks to BitGo and thanks to you, we are at this juncture. It's very, for AndX in 4 years, this is a watershed moment.
Absolutely, man. And we're so happy to, partner with you guys here in the States as you guys launch and take everything you've learned from overseas. And Viru, sitting in the seat that you guys are in, sitting across so many jurisdictions, you must have a very unique insight into all of the ins and outs of exchanges. So where do you think today we sit, and where do you think that we're going long term? And how do you think the difference between DEXs and centralized exchanges, how do you think all of this plays out?
Fair, good question in terms of that's very topical.
Yeah.
So where we see, if you dial back a little bit, how did we get here? One is regulation. Regulation is required. Otherwise, again, our kind of the retail investor gets screwed basically.
Yeah.
If regulation is not there, if full disclosure is not there.
And we've seen that, right?
We've 100% seen that. All these rug pulls, what have you.
FTX, etc.
FTX,
Absolutely.
right? Correct. So for us, this regulation is a welcome thing. At least regulation, which gives you clarity, which gives you a sort of sandbox, a checklist of, okay, if you are a digital assets exchange, you need to follow this.
Mm-hmm.
So that roadmap, that rule book is very critical. And we are seeing that happen. Prior to that, it was regulation by lawfare, by enforcement, so that really didn't work well. So what we are seeing in terms of, so where we are right now, we are seeing centralized exchanges, regulated centralized exchanges coming in. Turkey, Brazil, Philippines, you name it, US, of course.
Yep.
And DEXs are going to be there because the DNA of the centralized exchange and the DEX, as you know, they're very different. You're always going to have some users who prefer to, maintain their privacy. They want something like permissionless kind of access. They're okay trading assets which haven't been vetted by, let's say, a compliance team.
Yeah.
Right. They're okay managing the private keys. So for that profile, that archetype of a user, they're comfortable with DEXs. Mm-hmm. And, they do not want middlemen. They just, won't have no contact. So that population will always be there. Now, on the centralized side, actually, if you really think about that, institutions definitely want centralized because, like, for example, without a qualified custodian, let's say like BitGo, right? I mean, the infrastructure cannot be built. So y'all are at the building block of, because coming from traditional finance, right?
Yeah.
Whether the exchange infrastructure, the custody infrastructure, or the settlement infrastructure, I mean, that took decades and decades of, people like building. Yeah. So that definitely is coming into the centralized, and y'all are the pioneers. Y'all are, the BitGo, you'll have the OCC license, So qualified custody definitely is a thing in the act, So for us, what we see centralized exchanges, more and more institutions will ask for that. So it's a plus. The regulation is a plus. Then even, let's say from Turkey, right? I mean, Turkey, we have 3 million registered users, 1 million or so are KYC'd fully. So for us, it's a centralized exchange. We are top 3 in Turkey. And when the user runs into a problem, okay, they need customer service. Okay, these are the people, they want an interface where they're not dealing with private keys, gas fees, network fees. So that population is huge. So you're going to see centralized exchanges, growing. Mm-hmm. Okay, but some people from the centralized exchange population, they will move to DEX. And both these will continue to coexist. There is some convergence, on the edges in terms of centralized exchanges. Now we are seeing settlement on chain, for example. So you'll see, from a technology standpoint, you'll see that. But I think both of them will be in their own lanes.
Yeah, they serve different users at the end of the day.
Different users, exactly.
Yeah. The first use case for crypto, although I say this with some embarrassment, was essentially the world's biggest casino online. It sounds like you may think that we may have finally gotten past the lexicon of speculation kind of being the primary product market fit. You mentioned tokenization. What specifically around tokenization, kind of gets you excited and you're looking forward to, the most over the next 6 months to a year?
So speculation, we are hoping the first phase was a speculative phase that's gone. First phase was technology, actually, the blockchain coming in. Then you had this whole speculation. 2021, case in point, right, where basically the memes took over, and they said we are the ecosystem, and we know how that went, right?
Yeah, JPEGs.
Right, exactly. So, but now is real infrastructure, structural building has started. So we are in that phase, and so tokenization for us is the most compelling use case of Web3. Now, when you look at capital formation, capital transfer, capital allocation, okay, it's been done by developed economies, in a very centralized format, actually, if you really think about it, whether it's the US or Western Europe, maybe Japan, again, the 6 billion, 8 billion of retail users have been totally left out. They do not have the opportunity. They do not have the access. More importantly, they do not have the rails, the financial rails to come and participate in this big market.
Yeah.
So now what we have is, I think, the foundation of building something where you can include a lot of the population which does not have access. Previously, you had to be an accredited investor. You're going to need to write a check for 1 million, 5 million, what have you. But tokenization changes that. Case in point, we are tokenizing a 1,000 hectare land, as you may know, in Manila. That will be in urban Manila. That's the largest contiguous parcel of land in Southeast Asia, urban parcel of land. So we are building, or the sponsor is building the next Hudson Yards. Think of it that way.
Yeah.
And in Manila, it's like all the current central business districts are, totally densely populated. So there's no space. So our first tokenization project is a $100 million project. We are raising $100 million, and each token is $10. So we are seeing massive demand in Manila, Philippines itself. We are already about 1/3 filled, soft circled on that, and we're going to launch it in 3-4 weeks.
That's brilliant, man. I know we've discussed that a little bit in the past, and we'll have some role in that as well. But I think it's so exciting to see how far and how fast things have progressed just even over the last couple years. Again, you guys are a centralized exchange. Your mission, the ethos, the reason why you got into this seems to be heavily because you want to help out people who in many cases are debanked or don't have the access to the same financial rails that, maybe you and I and people that we know, do have the blessing of having access to. I'm curious, does the concentration of an exchange like a Binance, does that worry you? Does that give you any pause?
Let me tell you, it's controversial, but yes, having come from traditional finance where I've seen this too big to fail type situations.
Oh, wait.
Binance having that type of clout in terms of the volumes, etc., that is a systemic risk to the entire ecosystem. I mean, the industry knows that, and if you truly look at how Binance was able to dominate the space, they built it at a time when there was little or no regulation, and they took that opportunity. At that time, being able to move fast without respecting any regulatory or jurisdictional complexity, helped them build that up very fast. Now, that dominance actually will be their weakness because as countries start issuing regulations and, there's more order brought into the space, players like Binance, will be, squeezed more and more. And you'll see more volumes coming into centralized exchanges. I'll give you an example. Like my clients, institutional clients, will never deal with Binance. Okay. So imagine 31 trillion of assets which are going to be tokenized in the next 5-10 years. None of that will be going to Binance if things don't change. So that's the regulation is, very critical. So right now it's a risk, but I think even the players realize that, hey, we got to move towards centralized.
we're moving away from the move fast and break things part of the cycle to a more institutional, mature way of operating.
And that's why I think BitGo, will be a very critical piece because without a qualified custodian, like BitGo, this revolution won't happen.
It's interesting you bring that up. Obviously, the Genius Act has been the topic of the town for a little bit now. There's a piece of it that does specify QCs, qualified custodians, may be required. It sounds like you welcome that. It's a moat for you guys, if anything.
I think people do not, the misconception is, custody means, you're just putting in a safe and, you're forgetting about it. Okay, so it's not that because I've dealt with custodians, I've dealt with, clearing firms, it's like I've dealt with DTC, you name it, right?
Yeah.
So that education is required for the Web3 space. They do not fully understand, for example, even wallet infrastructure. I mean, you're providing not just the safekeeping part of it, but you're providing the rails for, the keys, the wallet infrastructure, the KYC, So institutional investors, when they're audited, they need someone. They need someone who can say, okay, these are regulated by OCC.
Yeah.
So that infrastructure, I think now people have to start understanding is a critical component of any Web3 progress we're going to make. Without that, you'll have another Binance, you'll have another FTX, you'll have another something else which you don't want.
Yeah. Do you think that your experience in markets that they kind of need, in many cases, crypto, whether it's because their currencies like in Turkey where inflation has run rampant over the last 5 to 10 years, do you think that your experience in those markets where they were kind of quicker in some cases to provide some regulatory guidance, do you think that helped you then understand this market and where the US was going?
Definitely. Turkey is, highly regulated. Mossack out there, which does the AML, the very, very, a Mossack inquiry is an existential event out there, because so you have to comply. They're very strict. So in Turkey, our experience, so in Turkey, what we learned is, it's at the best, crypto is a lifeline for the Turkish people. So when someone in Istanbul is purchasing USDT or USDC, they're not betting on crypto.
No.
For them, it's like, okay, I worked my entire life. I see my life's savings depreciate. So now how do I, safekeep that? So that is a very rational decision. So crypto is used in that way. But what is a moment of truth in, let's say, in Turkey? That individual, wants to be able to deposit, withdraw. These are the two things. So without friction, when they put the money in, they should know where it is. When they take it out, there should not be any friction.
Yeah.
So that is kind of, what we learned. For them, that is the most important thing. And that's why having, the rails, the infrastructure, especially regulated, is very, very critical. Now, what did we bring from Turkey to the US, right? So in the US, we're not building, a trading venue or a trading, exchange only. So we're building the financial rails, the infrastructure, obviously along with BitGo. And so AndX, where we kind of think the important thing, the learnings, is the resilience. So when we build infrastructure, so Turkey has taught us, okay, you may not have the best payment gateway. In fact, out there, even the custodians are, not really there. The banks do the custody, so it's good for you all to go there. But AndX's experience is, whatever we build, even in the US, we need to be, the infrastructure has to be resilient. You cannot depend on, a payment gateway or a payment provider, because many times they may be regulated, they may not be regulated. So that's why for us, regulated building blocks are kind of what are important.
Yeah.
And so that's what we bring. So anything we build is, totally resilient.
It's the chief compliance officer in you.
Yeah.
You always got your mind on being compliant. No, I love it, man. And I think from our perspective as well, right? Like we got our OCC federal charter a couple months ago.
Congratulations.
Yes, thank you again. Now, you guys have been along for the ride, and from our perspective, it's been a massive moat as well. And sure. I think it shows how far, again, that we've come in such a short period. To think during the Biden administration or even just, 4 years ago under a different regime, it wouldn't have ever happened. So it's really welcomed on our behalf as well. What do you think are the new risks for an exchange entering the U.S. market? There's a lot of different incumbents. A lot of things have changed.
What we look at, right? So if you look at the incumbents, right? For example, let's name it, let's a Coinbase, Kraken, what have you, right? What have they done when FTX happened? What have they done when Celsius happened, right? It's like
they called us in some cases.
So that experience, yes, they do have a brand, like 10 years of, they have a brand, and they have, they've been, let's say, battle tested on compliance and regulation in the courts,
Yeah.
So that is the experience I have, and it's mostly retail. In reality, the institutional space hasn't been, really, except if you take away the Black Rocks, the listed, the easy, low-hanging fruit. Really, the institutional space hasn't come in yet. And it takes time. There is no doubt. Now, for us, the opportunity again is regulation. See, now compliance becomes the product.
Yeah,
it's no longer the liability. If there are no rules, it's free for all. And then you're competing against fools.
The Wild West. Yeah.
You can't win. So, but with compliance, and for us that is core. We are compliance first. AndX is compliance first. So for us, that is actually a competitive advantage because we know how to operate in organized compliant markets.
Mm-hmm.
So there is tremendous space. It's massive growth market. And when we look at what we bring, which is a tokenization, we have the deep bench, the experience, and we actually have real projects. We have a pipeline. I don't know if we told you, we have a pipeline at the back of it, about 120 single-family properties, which we're going to tokenize after Manila.
Mm-hmm.
And this is in the U.S.
Brilliant, man.
And we're going to list those in Turkey, US dollar denominated in Turkey. So yield bearing, it's a fantastic use case.
Absolutely.
So we're going to do that. So tokenization, and what we also bring is liquidity. Being a trader myself on Wall Street, without liquidity, your tokens are, they're just tokens.
Yeah.
So that's why we built out the distribution layer as well, licensed exchanges globally, because the problems we are solving are global. They're not restricted to one zip code. So we see tremendous opportunity in operating in different jurisdictions, because what the US user may not care, the one in Turkey may care about a lot. So infrastructure, regulated infrastructure, I have to mention that, as well as the product suite, what we offer and the distribution we offer. I think that is unmatched.
Absolutely, man. You said something that piqued my interest. Institutions have come, but the low-hanging fruit. I completely agree with you, right? The ETFs are great. A lot of the movement has been fantastic. Where do you see that going? How do you think institutions are going to come on? What type? And how do you think that will evolve over the next year or so?
So the first, obviously you had the ETF, right?
Yeah.
And ETF is a great thing in that, Bitcoin ETF, because it requires custody. Someone has to hold the asset.
Yes.
So now it's a QC, qualified custodian, So that's great for the space, right? Then next you see build, BlackRock's build, they're raising money for infrastructure. So that also, I think they crossed $1 billion or much more in a matter of 6 weeks. So those are plus. Now we are seeing high quality assets, securities actually from MySpace, the CLOs, etc., getting tokenized. But again, that tokenization is not tokenization. That's like you're moving it from, what's, let's say DTC, you're saying I put it on the blockchain. No liquidity, nothing.
It's still paper at the end of the day.
Exactly. You're holding paper in digital format, right?
Yeah.
So that's why I do not see that. I mean, you'll see a lot of volumes because of, low cost. It's, low friction to do that. But in reality, illiquid assets are ones which will be tokenized when there's still a lot of value there, because the owner of the asset does not have to transfer ownership. They can, monetize many, let's say, rental yields. You'll see yield bearing tokens, be the next big wave. And for that, you need custody.
So I love how we're always in the mix.
It's totally, it's all intertwined. And now for AndX, it gives a lot of comfort, right? So when we go to our clients, and, you mentioned you'll have 250 million insurance cover.
Yes, of course.
So for us, that is very comforting. Otherwise, it's the Wild West.
Yeah. Obviously, I hear you on that, and that's something that we hear a lot from our clients as well. The insurance, look, they trust us, we're regulated, but at the end of the day, having the backing of a $250 million insurance policy through Lloyd's of London, it certainly lets people sleep very well at night, not having to worry about their assets in the event, the worst case event, anything happens. Very interesting, man. The institutional space, I'm excited to see what happens over the next 6 months. We're having a lot of really interesting conversations with projects around commodities, real estate. Do you think that we ultimately move to a world where we are the new financial system and the new financial rails, blockchain? Or do you think that's a bit of a pipe dream still, and that we'll see very particular assets like secondary securities or ones that have high transfer costs today?
So, no, it's not a pipe dream. It's not a pipe dream. Tokenization, that train is, moving fast. I mean, especially if you think of Larry Fink of BlackRock, right?
Yeah.
3 years ago, he was saying, no, this blockchain is this, blockchain is that, crypto is this, crypto is that.
Same with Jamie Dimon.
Same with Jamie Dimon. And then in Davos this past January, Larry Fink said, we are not tokenizing fast enough. So yes, you'll see efficiencies in distribution. So you'll see mutual funds being distributed as tokens.
Yeah.
So it's efficient. Beyond the efficiency, tokenization should actually unlock new sources of liquidity and new sources of access. Okay. See, that is when the circle gets completed. Otherwise, you're moving from, technology, Microsoft 1.0 to 2.0. It's feature rich, it's probably efficient, it's more colorful. But beyond that, you're not actually creating real value.
Yeah. The fundamental shift doesn't just come from like having faster and cheaper. It comes from the full ecosystem coming together.
Totally.
That's very interesting. We've talked a lot about trust, qualified custody, institutional rails. Obviously, you mentioned FTX, Celsius, some of these other honestly blow-ups that have happened here in the industry. What do you think, operating across all of these different jurisdictions, it takes to earn institutional trust, is particularly, but also individuals and some of these retail clients as well that you're going after here in the States?
So one thing I've always maintained, and this may be my compliance officer hat, but in AndX, that's drilled into every employee, every partner, because it's easy to make mistakes, and some mistakes are forgivable, but overall, that compliance is very important. Now, trust, it's at the core of, any system for that matter. Now, how do we instill trust? First is assets should be segregated. People should know, okay, you can audit, you can look at the audit reports, you should have access to your assets at any time. You should know where they're stored. So that is a very important thing. Then the second aspect, again, I come back to qualified custody and why that's important. Because BitGo is regulated, right? Now, BitGo does not have a conflict of interest. Like they're not running AndX.
No.
They're not AndX's treasury. They're not, our trading engine, for example, right? So for the institutions, that separation is very important because you have these blow-ups when the same entity is holding your assets, same entity is trading, making markets. So, there's no guardrails, there's no separation.
Yeah.
And hence you saw FTX, one of the reasons, the blow-ups, right? So now for us, when we have this separation, that builds trust in the institutions. So what we do on the exchange side, we make markets, etc. That's separated from who's holding the asset. So very it's very common in traditional finance, because they've polish that stone, well
Yes.
enough that, so we can bring that good practice into Web3.
Yeah.
Then the other, which is, given lesser importance, is actually the people. See, the institutions, the people who are behind, let's say behind AndX. So the institution should know who the people are, what our background is, what have they done, during difficult times, and being FINRA, ICC regulated, registered. So what I do in the financial industry is all public information.
Yeah.
So that gives another layer of trust.
Absolutely.
So that is, So earning trust will be through these mechanisms. So what I say is, we are not building a product and we are not like telling you trust us. It's not that. We are building a system where we do not need your trust because the system itself has those, guardrails, those moats, if you will. So the assets cannot be lost. The assets cannot be pledged to someone without the knowledge. So that is what I think is very critical for institutions, even for the individual.
It's fascinating because what you described is really basic checks and balances that you said we see in the traditional financial system all the time.
Totally.
Why do you think it took us so long in Web3 to get to this more mature state?
I mean, it's a philosophical question.
It is. Yeah, it's open-ended.
It's almost, it started as a revolution against traditional finance, but at some point it took a different turn.
Yeah.
And we see that even if you go back to finance, securities issuances, in the early part of, let's say, 1910, 1920, it's like people used to just sell something to 50 people, the same asset to 50 people. And hence you had all the laws come in, the SEC was formed.
Yeah.
So I think it is just evolution. Just like you look at any map of any sector growing, you form, you storm, norm, and then perform.
Yeah.
Those are the 4 stages. So in Web3, yes, you form, right? Then storm, you had all the frauds, what have you. So you clean that up. Then you norm. We are in the norming, building infrastructure, building the foundation stage, then perform. That's once you have a strong foundation and, people are building good systems, then you perform. So then it's easy to, on-ramp all these assets into Web3. Even if you look at, let's say, the impending intergeneration transfer of wealth.
Yeah.
Like trillions of dollars over the next 5-10 years are going to be handed down, or what are they going to be transferred to what is basically the Gen Z and millennial generation. Now, they're not DTC. They're not, they want tokens. They're going to store everything on the wallet, so to speak.
Yeah.
The infrastructure is just not there. It's, so there is tremendous opportunity going forward. And trust will be built only through these, I hate to say, but yes, centralized, regulated building blocks.
Yeah, you guys provide a pillar for everybody else to then kind of work off of. Without the centralized exchanges, ultimately, it would be a lot harder. I mean, first off, you wouldn't really be able to on and off ramp,
totally,
but it would be a lot harder to ultimately have like a robust ecosystem. Very interesting, just given your background, right, in finance, your experience. This is one of, I'm sure, many different aspects that crypto will ultimately pull from traditional finance and from the traditional system into these new rails. Again, a bit of an open-ended question,
Sure.
but just given your background, I'm curious,
Yeah.
how do you think that might play out? Do you think there's any other low-hanging fruit that's important, like segregation of who holds the assets, who's the market maker, or just open-ended, but I'm curious.
Yeah. So we will see the liquidity. Liquidity providers right now, they do for limited assets.
Mm-hmm.
It's typically, crypto coins, tokens, currencies, what have you. The liquidity has to come in to, let's say, real world assets being tokenized, or for that matter, any other securities being tokenized,
Mm-hmm.
especially the illiquid securities. Without liquidity, the process will take longer. And hence at AndX, what we do for every tokenization we set aside a liquidity reserve. And we give limited liquidity, so if people want to sell, they can actually sell, and we make very tight markets.
Yeah,
that's a philosophy, and so we're using both the broker dealers, the securities licenses, as well as BitGo's infrastructure and regulatory, OCC covered the whole 9 yards into building this. Yeah,
BitGo's been around since 2013. Started off really as wallet tech, security tech, and a custodian back in 2017 when we got our first trust license. We have, through our partnership, I know we're working through the crypto as a service model, where essentially you guys, let's just call it our operating system to keep it short and sweet, the full suite of services, all via API, plug into your front end. I'm curious, RWA is on top of that. Is tokenized equities the top of mind, or is there something else that you guys, other than the real estate, that you guys kind of have?
So when we look at the different the tokenization suite, if you will, again, coming from a trader mentality, I go from illiquid to liquid.
Okay.
We will stay away from tokenized equities. Because that's like, there's so many people in Times Square. You go, they'll sell you tokenized equity. So
it's a crowded market.
It's a crowded market. We don't necessarily want to be there. But where we think we add value, one is real world assets. That's like, everyone understands it. Okay, so that is one aspect. But we bring liquidity with it.
Yep.
Next, what we do is we tokenize bonds, and these are, again, our use cases. US dollar denominated AAA bonds, but these are structured credit bonds. Mm-hmm. These are CMBS bonds, CLOs, and then we sell them in overseas where people own US dollar plus yield. So the yield bearing story is very important. They get current income every month.
Yeah.
So it's a huge plus for them. Then once the security, then we will actually do limited private company, limited partnership. We'll tokenize that. I would think of SpaceX is going public, but so if I tokenize SpaceX, limited partnership, let's say, because we are broker dealer, we have access to that, and I sell it in India for $10, one token. I mean, that guy in India will be, making a frame out of that thing and say, Elon Musk is my partner, and this whole village will be coming and worshipping that. Yeah. So it's vanity for them, right? It's like, okay, $10, I own SpaceX, in their mind,
Yeah. I love it.
So there's a huge market for those private, pre-IPO stocks, as they call it. So we will be very active in that area.
Yeah.
Then I was in Dubai. You asked me why. Okay, so this is, you hear it now. So in Dubai, so what we are doing is we are actually tokenizing a Lamborghini. So we are tying up with the car club there.
What kind of Lamborghini? Diablo? Is that an OP question?
Yeah, OP question. So we're going to sell, let's call it 42 tokens.
Okay.
And each token gives you the privilege of using it for a week in a year. And then we build the tokenomics. So tokenomics is very important for the token economy to actually self-sustain, which very few people are thinking right now. So the remaining, call it 12 weeks, our blackout weeks. Let's say New Year's Eve, someone's getting married, it's like, Ramadan, Eid,
Yeah.
what have you, right? Your family's coming in, you want New Year's Eve. Your friends are coming in, you want New Year's Eve. So we put an auction for that.
Nice.
So that's how, if you hold a token, and you don't want to use it, if you're speculating, you wait for that auction and then, and you sell it. And then we burn the tokens and then we issue new tokens. So that is how that life cycle happens. And obviously the maintenance is done by the car club there. And, they get some tokens, what have you. And so that's another, again, it's vanity. But again, it is allowing people to actually have this Lamborghini for a week.
Yeah, there's real utility to it.
Real utility to it.
Yeah.
And, you don't have to pay full for that. You don't have to pay for it when you're not using it.
Yeah.
So those are the, frictions, we are solving for. And those are where we bring true liquidity.
I'm going to ask you a tough question.
Yes.
I look at BitGo, I look at a lot of these different tokenized, either money market funds, whatever it may be. The liquidity aspect is one that I see they're great products. We have a lot of clients who use them today. But if we're being frank, the liquidity isn't necessarily there yet. So I know you guys have a lot of relationships with market makers and LPs around the globe, not just here in the States. That must put you in a very unique position to then take these kind of private markets, let's call them secondary securities for these private securities, and actually bring liquidity and bring the full ecosystem to it, where it doesn't just kind of live in isolation or in a vacuum. As we previously said, it's not just like a paper security. How did you bring those partners together?
Great question. I mean, it's and liquidity is the lifeblood, right, of any trading system.
Yeah.
So the way we approach liquidity is slightly different. I mean, you could always go to the liquidity providers and, some will do some will do, many. But generally speaking, they stick all of them clustered towards, crypto coins, et cetera, et cetera.
Yeah, like the top 40.
Top 40. So what, again, from traditional finance, there is, something called, you could provide liquidity to certain structures. So the liquidity provider, it's a reserve, and they get paid for saying that, okay, I'll be the backstop when, someone needs to buy this at this price. So we are structuring something very similar to any of the tokenizations we do. And they're, for example, let's say now staking. People stake stuff, they get some yield, et cetera, right? So in essence, people will actually put their funds with us and we pay them.
Yeah.
And we use the funds for liquidity. So that's the mechanism we are actually borrowing from traditional finance. And it works well because liquidity facilities, I've run, 4 or 5 billion worth of liquidity facilities in the past. And if you structure it well, they work very well. It's and obviously you underwrite the asset. You just can't create.
Yeah, you've got to have the proper rails. Going back to that. Well, Viru, it's been an absolute pleasure having you, man. Really enjoyed our conversation. Wealth of knowledge across both, many decades of experience in finance and the legacy system, as well as now in crypto and digital assets. So really appreciate you taking the time, man.
Thank you.
Absolute pleasure. Thanks, man.
Thank you, Zed.